Hello and welcome to our webinar on becoming an educated insurance buyer. Thank you for your overwhelming response to our first webinar, and we are excited to be working with you and being able to share this knowledge. We would also like to say to all of you, thank you for making a difference and thank you for helping everyone you help. This webinar today is in 3 parts. Who you are, educating you as the insurance buyer, professional buyer, and speaking to you about our product offerings. There'll be time for questions at the end. My name is Robert Sperber, the Director of Program Sales here for Wagner Group and SterlingRisk. I've been here for 2.5 years after retiring from the Travelers Insurance Company. Today's presentation is being presented to you by the Wagner Group, your insurance broker, and Great American, the carrier right in this program. We're happy to have Great American as our exclusive carrier for Wagner's program. Founded in 1935, the Wagner Group has provided low-cost, comprehensive coverage to drug and alcohol counselors. The Wagner Group was acquired in 2004 by SterlingRisk, one of the largest private insurance brokers in the nation. The Wagner Group has been providing the services and stability you have counted and trusted on for over 25 years, backed by our insurance carrier's A+ superior financial strength. Our program administrators, Patricia Kenny and Marie Manchillo, have been servicing and working with you for many years. As of April 2015, we aligned with the Great American to enhance and simplify our program. We now offer you the best-in-class coverage and service. The combined experience of the Wagner Group and the Great American allow us to stay on top of changes and emerging issues such as peer support specialists and life coach specialists. We will continue to communicate with you on educational topics through our webinars and newsletters. Our mission is to protect people by providing comprehensive, competitive insurance products that address emerging issues. This enhanced product offering through our exclusive program with Great American accomplishes this mission. For our webinar today, we are excited to offer improved coverages and rates with our new carrier, Great American. Great American is one of the most respected insurance carriers in the country since 1872. We are proud of our relationship with Great American and thank them for their involvement in this webinar today. And here from Great American today is Kent Barnes, who will be presenting our webinar.
Thank you, Bob. Thanks to everyone on the phone. Greetings to you all from downtown Chicago, Illinois, where it's a beautiful fall afternoon, sun is shining, and a nice breeze. So October is getting off to a great start here, and hope it is for you as well. I want to spend a minute and just say thank you for allowing Great American Insurance Group to be a part of this conversation. We're really excited to be working with the Wagner Group, who is very respected in this field. And in addition, as Bob said, Great American has a long history of serving nonprofits, social services, and those who support our most sensitive members of our communities. So it's especially exciting for us to be here today. I'm going to spend the most of my time with you today really trying to educate you on some basic insurance terms and some insurance concepts that you need to be aware of, that you can be able to ask questions and understand if people ask you these questions. I'm going to talk a little bit about basic insurance, and I'm also going to come back to the program that we have with the Wagner Group, kind of showing some what I would consider at least some possible benefits for you. The first of those benefits I want to point out to you is that the program that we have with the Wagner Group provides 3 different limits of coverage. And we look at this as 3 different legs on a stool. So professional liability insurance, general liability insurance, for each of those coverages you have $1 million per occurrence limit. And for abuse and molestation coverage, you have $100,000. So each of those limits are separate, and they would be, in the event of a claim, they would all be, they would not be run together, no erosion, if you will. We're going to spend most of our time today talking about professional liability insurance and talking a little bit about general abuse coverage. General liability is a very broad topic and will be covered at subsequent webinars. The first item for professional services I'd like to talk about is for our professional coverage, the incredibly broad definition that we have for professional. It is one of the most broad, if not the broadest definition within the industry. And for your types of work, we would definitely cover counselors, psychologists, therapists, any of these people who are giving the kind of counseling that you do. That's definitely considered within our coverage form. In addition, in the form itself, it also lists anybody who is not covered in certain occupations that wouldn't be covered. So if you ever had a question about whether or not there would be coverage there for a certain occupation, you can look there. Before we get too deep into the professional coverage, I'd like to step back and talk about what is a fairly basic, it's an insurance concept, but it's one that can be kind of confusing if you don't understand it. And the importance to you, the policy owner, is that when you are looking at your coverage, when you're talking to someone about the coverage, you need to be able to understand kind of the difference between these two basic concepts and how it applies to which policy would respond in the case of a claim. And this is no different from Great American or from any other carrier. This is just kind of straight insurance information helping you be a more educated buyer. So the liability coverages for the professional, for the general liability, and for the abuse, they can be written in one of two ways: occurrence or claims made. And all this really says is, in the event of a claim, which policy would respond? And it sounds kind of simple. It sounds like, well, if I've got a loss and something happens, well, which policy would respond? The one that was in place when the occurrence happened, or the one that was when the claim was actually filed? And that's the difference between these two. With the occurrence coverage, it's very simple. The coverage, the policy that's in force at the time of the loss would respond to a claim. And it doesn't matter when the claim is filed. It can be filed a year later, 10 years later, 25 years later. It doesn't matter. With an occurrence form, the policy that's in force at the time of the loss would respond. And so the difference is with the claims made policy. The claims made policy is a little more complicated. You kind of have to be able to keep a couple of things in your focus so you can understand what would be covered, or which policy would respond, I should say, in the event of a claim. The claims made policy would respond in the policy that was in effect at the time the claim was made. So, for example, if you had a claims made policy that was effective from January 1, 2015 to December 31st, 2015, and a claim was made during that policy period, that would be the policy that they would look at. However, it's not quite that simple. There's at least one other policy term that would be looked at to determine whether or not the policy would respond, and that is the term, the retroactive date. It's on the first bullet under the claims made policy. And the retroactive date is a date that's in the past, that is the first date that would be when claims could be considered. So again, I'll take my example. Just January 1st, 2015 to December 31st, 2015. That's the policy period. The retroactive date, let's call it January 1st of 2014, okay, a year before this policy occurred. And the retroactive date says anything that happens before January 1st, 2014 would not be covered under this current policy. And so it's important to know that if you have a situation where you're either new in business or you haven't had a claims made policy before, you want to make sure that that retroactive date goes far enough back that you feel like any losses that could come would come after that retro date. Simply because if it happened before the retroactive date, the carrier would say, I'm sorry, this policy won't respond. The premiums, there's a little bit of a bullet on both of the premiums. And I'm going to get to that in a couple of slides. I've got a graphical representation that will kind of show that. I want to talk now a little bit about tail coverage, or what they call an extended reporting period. So we spent just a second before talking about the retroactive date. This is a period of time prior to the coverage that you would want to make sure goes far enough back so it would pick up any possible events that happen before the January 1st policy period. Well, this is actually goes on the other side. So in the case that you have a policy and for some reason you decide not to renew the coverage, maybe you leave the industry, or maybe you retire, or maybe you change insurance carriers and you go to an occurrence policy like we talked about at the beginning. Well, in that case, then a claims-made policy only gives you a certain amount of time to report a claim. And so what you would want to do is you would want to purchase a tail coverage. And what that provides you is additional time to report a claim. It does not extend your coverage, but it just merely extends the time that you have to report a claim. In many cases, it can be 3 years, it can be 5 years, it can be longer than that, but you have to pay for that. I put in here it can cost up to 175% of the premium. That's a ballpark. So some it will cost less, some it will cost that much. But the important thing to understand is if you do decide to end the claims-made coverage, you probably should purchase an extended reporting period endorsement, which will give you more time to be able to file a claim. The retro date, we talked a little bit about that a couple of minutes ago. The retro date really is something at the beginning of the policy period, or prior to, I should say, the beginning of the policy period that you want to be aware of. So if you go back to, what are the advantages of an occurrence form? I spent the last several minutes talking to you about the need to check your retroactive date prior to the coverage beginning and possibly looking at having to purchase a tail coverage at the end of a claims-made policy. With an occurrence policy, you don't need that. As long as you've got an occurrence policy that's in force at the time of the loss, that's the policy that will respond, and there's no limitation on when the claim is filed. The premiums will not increase year by year for the first couple years, and again, I'm going to talk about this on the next slide. And the other piece is, and this is where I'm going to step back from my basic insurance knowledge hat and put my hat on for this program, is the program that we're offering through Van Wagner is an occurrence-based program. And we really believe that that is a simple approach, both for you and for Van Wagner, and they agree. And also, you're going to have more experience. You're going to have more experience learning Van Wagner and going through some of the opportunities, education opportunities or whatnot that Van Wagner has. So I'm going to give one last little explanation about the difference between claims made and occurrence, and then we'll move on. But here's a scenario that could happen. A former client alleged a professional misconduct 3 years ago. And we're going to say, for the sense of this statement, that they alleged it today. So they allege it today for something that happened 3 years ago. In order to determine whether or not you have a policy that might respond, for an occurrence, you're going to go and look back to see if you had an occurrence policy in place 3 years ago. If the answer is yes, you move on. If you have a claims-made policy, then you have to make sure you have a policy in force today. You have to make sure that the retroactive date is at least 3 years ago, or the event happened after the retroactive date. And in the case that you don't have a claims-made policy anymore, you need to make sure that you have tail coverage in place that would pick it up if the claim was filed today. It can happen. I mean, both of these forms, you can structure it, but from my perspective, it's just a little bit simpler. I want to talk a little bit about the premiums between occurrence and claims made. And I would ask you to limit what you're looking at on the right-hand side of the screen with the dollars, because those dollars aren't exactly accurate. But look more at the trend line and the chart on the left-hand side of the screen. What you're going to see is, for an occurrence policy, you're going to see pretty stable pricing. That's the blue. And it's going to be pretty stable. And the benefit of that is you will have the ability to look at your budget and expenditures and more accurately plan for those. And over the period of time, those premiums are going to stay pretty consistent. The difference, the claims made, in the first couple years, it tends to be a little cheaper than the occurrence, and that's simply because of the way the policy is rated. And again, I would just use this as a basic trend, not using specific dollars. But after about 3 to 4 years, the policy premiums between claims made and occurrence are almost identical. And in fact, after about 5 years, they pretty much are identical. So you might get a little bit of a break on the beginning, but after 4 or 5 years, you're pretty much going to be paying the same premium. And if you go back to what we talked about before with the tail coverage, if you should decide that you want to cancel your claims made policy for whatever reason, then you would probably be smart to purchase a tail coverage, which would be an additional premium. So your overall cost of insurance would be as much or possibly more. So again, this from my perspective comes back to a little bit more of the occurrence just tends to be a little bit simpler. And from a simple policy, that seems to make things a little bit better for you as the insured. I'm going to pivot real quick and talk about a couple of professional liability loss scenarios. And I put these on here because I wanted you to have a second to be able to take a look at this and think if you or someone you know has had anything like this. These things happen. Claims happen. I hear often, we never thought that this would ever happen to us. I can't believe that that person would do this, such and such like that. But it happens. And these kinds of losses can result in a financial loss for a client or a former client, and they can ultimately come back and impact you. So you guys right now are the smart ones. You are the ones who have the professional insurance and who are protected. My challenge to all of you is to go out and tell your friends if they don't have a great insurance program, talk to our friends at Van Wagner and see if they can't set them up, because this stuff is important, and professionally you have to have it. So I'm going to switch gears and talk a little bit about abuse and molestation. And I'm going to talk about 3 things with our abuse and molestation. The first is that our abuse and molestation is not limited to just children, or just the elderly, or just developmentally disabled, or just anything. Our abuse definition is for anyone who is of a sensitive population. The benefit for you is that this form will allow you the freedom to be able to work with the people that you can best affect and that are there in your community. And this coverage will provide the protection on the abuse form. So very broad definition. The second is that I talked briefly about at the beginning that the limits of liability are separate from the general liability and from the professional. So you've got 3 different separate sets of limits, which is great for you. In the case of having a claim, you don't have to worry about one claim wiping out all of your limits for the whole year. The third, and the most important specifically with this, is that defensive costs are outside of the limits of coverage for abuse. And this is really important because, in general, what I have seen from my time working with this coverage is generally the defense costs are significantly more than the actual payouts. And it's not uncommon for the defense costs to be tens or even hundreds of thousands of dollars. And if there's any payout at all, it may be minimal. So the security that you have here, knowing that the coverage is provided with defense costs outside the limit is really important. Our coverage provides $100,000 worth of actual limit of damages for abuse, and the defense costs are outside the limit. So that's a very important. It's a very important topic, and you want to be, make sure that, again, this is an opportunity for you to make sure that other people have got the same type of coverage that you do. A little bit more on abuse and molestation. The question is, did you purchase the right coverage for yourself and your organization's abuse exposure, and did you purchase insurance from a sound and reliable insurance company? I can certainly speak on behalf of Great America and say this is a type of product that we are excited to offer. This is a program that we lead with, and we're very confident in this, as well as I know our friends at Van Wagner they have an incredible amount of experience with this business. So I'm very excited about that. Again, for me, it really comes back to understanding that you do have an exposure when you're working with a sensitive population, and the coverage that you have now provides both the limits that you need in case of damages and also defense costs outside the limits. So that's really important. Now I'm going to turn it back over to Bob, and he's going to talk a little bit more about the Van Wagner product offerings.
Thank you, Ken. Now I want to review some of the highlighted coverages the Van Wagner Group is able to offer you with our new enhanced program exclusively through Great American. Our professional liability is a broad definition professional services. We can cover clinical supervisors, mental and health counselors, psychologists, social workers, family marriage counselors, and many, many more. The policy also covers those who are not just degree professionals. Professional liability is available for full-time counselors and students, as well as discounted rate for those working part-time. And as we all know, students are an important aspect to this industry. Hopefully we can all guide them and help them to our website and make it easy for them. Our limits are very important, as Ken mentioned. We offer a $1 million each incident with a $3 million annual aggregate, but can offer higher limits up to $2 million per incident with a $2 million annual aggregate when required by the state, contract, or for those who just want higher limits. And that's at a flat cost of $25. We offer a signature general liability broad endorsement built into the premium through our exclusive Van Wagner program with Great American. We also offer, as Kent indicated, our abuse and molestation with limits of $100,000 each act of abuse with $100,000 aggregate. Defense expense outside limits. I'm going to repeat that because that's very important. Abuse and molestation with a $100,000 limit for each abuse and a $100,000 aggregate. We also offer additional insured at no cost, automatic status when required by a contract. An example, landlord. Our Allied Health and Professional Plus endorsement, again, exclusively through the Van Wagner Group and Great American, offers peer review, a $25,000 to $50,000 limit for administrative defense of HIPAA notification costs. And our definition of HIPAA is a complaint is audit, investigation, ADM proceedings, arbitration, claim, to be a civil lawsuit or a legal action brought against you or any person of the entity or federal, state, or local agency. It also covers complaints brought by the health care insurance company to determine if fees you have charged as reasonable and proper. Another coverage we can provide you with would be LLC, PC, incorporated, or an S-Corp. So this applies to sole members of a corporation or LLC when the owner or member is the only person providing services and there are no employees. If you don't have employees, then this coverage is important to you. If you carry only an individual policy and your corporation is named in a claim or suit, you will not have protection for the action against your corporation. This is covered at no additional premium, provided you are the sole owner or sole employee. The policy you have needs to be written in a corporate entity name to be covered for your entity. So please call either Patty or Marie, and they can help you out with this. Our value-added services include education programs such as our abuse prevention, slip and fall elimination program, and social networking safety. We will continue to provide newsletters and brochures and continue to provide education and communication to you. As many of you might have seen by now, our easy automatic renewal and pay online access makes it easy to do business. You just need to go online, pay the premium, and you're done. No applications to do your renewal. Our newly designed websites keep you up to date and will allow you to stay connected to us. And we'll continue, as we're doing today with webinars, to provide webinars for education. So please let us know your suggestions for future topics, for any future topics. You can always reach us on our website at Van Wagner website, www.vanwagnergroup.com, or you can call us at 1-800-735-1588.